Welcome to Retirement Rescue Radio, a show specifically designed to help retirees and pre-retirees maximize their financial efficiency so you can live the retirement lifestyle you've always imagined. Your host is Nate Miller, investment advisor representative and author of the CPR Retirement Rescue Roadmap. Nate discusses thoughts and ideas from some of today's most knowledgeable professionals in the field of finance. He offers strategies along the way to help you make better financial decisions so you can maximize your retirement. This is Retirement Rescue Radio.
Well, hey there, it's Nate Miller, your host of Retirement Rescue Radio, and we've got another episode here for you today. And, there's a ton of stuff that's going on right now in, markets, the economy, the political realm, you name it. But today we're going to take a break from a lot of that, and we're just going to have something fun. So I get to read a lot of financial news, right? It's kind of one of my favorite parts about the job, but it also gives me a front row seat to some of the downsides of financial journalism. The stuff that you hear financial advisors say, right? Honestly, come on. Some of it is it's gibberish. It's nonsense. It's garbage. And really some of it doesn't even make any sense. And some of it is just plain stupidity masked by $100 words, in my opinion. And let me tell you, there's a lot of it. So today we're going to do a couple of things. First, I'm going to go through a lot of stuff that you might hear a financial advisor say. You might have heard somebody say this in the past. And I may have been guilty of one or two of these myself. So I'm going to be kind of poking fun at myself, my industry a little bit. But then you're not off the hook either. At the end, we're kind of going to go through some stuff that I normally hear that could be maybe not the most intelligent sounding financial information or viewpoint that someone might want to give me as what they're thinking of doing, right? So they think they got a great idea and they want to tell me about it. And I right off the bat, I can just tell this is a really bad idea, right? So we're going to go through some of that too. But to start off with, I'm going to be poking fun at myself and my industry here for a little while. So first off, is going to be like what you hear dumb people say and kind of the reaction, dumb advisors say, and then the reaction to it. So here's one of them. They don't have any debt except for a mortgage and student loans. Really? Okay. Well, I'm a vegetarian, except for bacon wrapped steak. Right? How about this one? Earnings were positive before one-time charges. Yeah, that's like saying this is Wall Street's equivalent of, other than that, Mrs. Lincoln, how was the play? Yeah. So basically that means that, earnings were negative, right? After the one-time charges. Why don't you say that? How about this? Earnings missed estimates. No, earnings didn't miss estimates. Estimates missed earnings. No one ever says the weather missed estimates. They blame the weathermen for getting it wrong, right? Finance is like the only industry where people can blame their poor forecasting skills on reality, really, Or how about this? Earnings met expectations, but analysts were looking for it to beat expectations, right? If you're expecting earnings to beat expectations, you don't know what the word expectations means. So anyway, how about this? It's a Ponzi scheme. Which the number of things called Ponzi schemes that are actually Ponzi schemes kind of rounds to zero. It becomes a synonym for things I disagree with, right? Here's one of my favorite ones. Economists agree that the stock market could go up or down in the near future. Well, no poop, Sherlock. Really? All right. Or how about this? The thing that's not going perfectly crisis, right? Boy who cried wolf always meets analyst who cried crisis. The number of crises that actually appeared, I think the vast majority of, I want to say, analysts have predicted about 10 of the last 2 crises, in my opinion. So, he predicted the stock market crash of 2008. Really? Well, he also predicted the crash of 2006, 2004, 2003, 2001, 1999, 1997, 1993, 1992, 1974, and 1971. Yeah. Well, the market has more buyers than sellers right now. No, it doesn't. No, that is the equivalent of saying that someone has more mothers than fathers. There is one buyer and one seller for every trade, every single trade, right? Or how about this one? Here's a great one. Stocks suffered their biggest drop since September. September was like 6 weeks ago. Yeah. Or how about, we're cautiously optimistic. You're also an oxymoron. Or there's a guy on TV saying it's time to sell XYZ stock. Who's that advice for? A 20-year-old with 60 years of investing in front of him, or an 82-year-old widow who needs money for a nursing home? I mean, it makes a little bit of a difference, right? So, yeah. We're neutral on this stock. Stop that. You don't get paid to be neutral. There is minimal downside risk for this stock. Yeah, I guess some lessons need to be learned the hard way. Enron, WorldCom, okay. We are trying to maximize returns while minimizing risk. Unlike everyone else who's just trying to set their money ablaze. Now, in all honesty, I think I've said that one before. I've probably said that one. Yeah. Shares fell after the company lowered guidance. I mean, they just proved their guidance can be wrong. So why should we take this seriously, really? I mean, I don't know. Our bullish case is conservative. Our bullish case is conservative. Well, then it's not bullish. It's conservative. Those words mean opposite things. So stop saying them, right? Or here's a great one. We look where others don't. So many people say that it can't be true for everyone. Yeah. Or how about someone saying, I think XYZ might be the next black swan. Blood pressure kind of rises every time somebody says that. You can't predict black swans. That's what makes them dangerous. Like, we can invest knowing that a black swan will happen, but we don't know when or what it's going to be. We don't. We're waiting on more certainty. Good call. Like in 1929 or 1999 or 2007, when everyone knew exactly what the future looked like. Can't wait for what you think. Or how about this? The Dow's down 50 points as investors react to XYZ news. Stop it. You're just making that up at that point. The stocks are down and nobody knows why is probably the only 100% true, honest headline in that category. It's impossible to know all of the factors that may or may not have led to the market's decline. Impossible. Here's one. Investment guru XYZ, insert your favorite investment guru's name here, right? Says that stocks are going up or stocks are going down. Pick your poison, right? What you should do is go to Morningstar.com, look up that guru's track record against their benchmark. More often than not, their career performance lags an index fund. So just stop calling them gurus, please. How about this? We're constructive on the market. I literally have no idea what that means. And I don't think you do either. And I don't think the advisor does either, right? Or how about there's a noun verb bubble, right? There's an XYZ bubble. Call it the tulip bulb mania bubble, right? Whatever. And that's just a sarcastic observation. That's really all that is. I don't know. Noun verb bubble. All right. Investors are fleeing the market. No, they're not. Every stock is owned by someone all the time. This is the same as there are more buyers than sellers. No, there's not. There are always buyers, and there's one buyer for every seller, every one of them. They are not fleeing because everyone always owns a stock. Anyway, yeah, we expect more volatility going forward. I may have been guilty of saying this one too, but there's never been a time when that's not the case, So I also expect more winters. That's easy. I expect more summers too. So, right. This is a strong buy. What does that mean? Does that mean we're supposed to click the mouse harder? When we put in the order on the brokerage account? He was tired of throwing his money away renting, so he bought a house. And you know that paying a mortgage is like renting a house from a bank, right? This is a cyclical bull market in a secular bear. That's just nonsense. That is utter nonsense, complete nonsense. That doesn't mean anything. And these are just fancy words that you thought up to try to impress women at a cocktail party. That is it. That is it. Will Obamacare ruin the economy? No, and get a grip. And just insert anything in there. Will anything that any politician comes up with ruin the economy? No, it won't. We've had so many things that have come through in the past that have not wrecked the economy. You're giving one person way too much power when you think that. They don't have that type of power. So there's a lot of those. Here's one. No. Sorry, this is going to be one for later on when we actually do the stuff I hear clients or prospects, prospective clients say. So, okay, here are some things that people say to advisors that may or may not be the best. Now, you need to know, Mr. Advisor, the men in my family don't make it to retirement, so I don't worry about saving. That's nice. So that originally came from a client whose father, grandfather, and 3 uncles all died before retired. And some people that are too quick to rationalize away the hard work involved in saving for retirement by assuming they won't get there anyway. Problem solved, right? Unless they live a long life. And so, I told him just because the members of his family died early doesn't mean that he's going to as well. Even if you have the same conditions, whether it's physical, occupational, environmental, medical advances may keep you healthier much longer than you think. Most people, if you end up being, old enough and you realize that you lived extremely healthy the entire time and you're sitting there now at 95 years old, if I were you, I'd start eating more cake at that point, right? If I live too long, I'm just gonna be, man, I wish I would have eaten more cake, right? So eat it now. I did get him to agree that, hoping he died young was not a practical solution to a financial problem. While I don't think he was completely won over, he did increase his 401k contributions and decided not to buy the boat he couldn't afford. So there we go. I was told not to put money in my company's 401k. Had an client whose former advisor told her not to participate in her employer's 401k due to its lack of investment choices. And that was many, many, many years ago. So she missed out on not only the match and possible returns, but she didn't even save in any other retirement account at all during any of those years. So by not encouraging the client to participate and then not suggesting anything else, the former advisor caused that client to miss out on several years of saving and investing and lots of years of growth as well. Yeah, really bad advice. If you're going to say, don't invest in this, you better have an alternative for them to invest in. All right. So, yeah. This one just blows my mind. You should buy high and sell low. What? And what's crazy about this one, this came from an accountant. The client had mostly stock portfolio because they had a long investing time horizon. And during the call, he was told by his accountant that he should sell now that the market was down and then wait until it came back up before reinvesting. That is the opposite of buy low, sell high mantra that everybody knows from Investing 101. And this was coming from an accountant, no less. So I have to say this. So when you get investing advice from an accountant, there's a lot of great accountants out there that are great with taxes, right? But if you're getting investment information or advice from an accountant, take it with a grain of salt. They don't have the training in that area, right? It's taxes only. Like I can tell right now that the reason that they're thinking that is because, well, they might get a lock in some losses, so they write off some stuff on their tax return, but don't make a tax decision at the expense of an investing decision, because still you only pay a percentage of the gains in taxes and you only get to write off a percentage of the loss from your taxes. So it's not like it's dollar for dollar savings. So okay. Yeah. Selling an investment when it's down is guaranteeing a loss. One of the most ridiculous things I've ever heard. How about this? My golf pro knows about this great opportunity. Yeah. No. Yeah. So in this case, this was someone who had been recommended that they invest in a real estate venture in Florida, and it was advised against. And before he heard about the deal. He'd been working on a financial plan that included contributing to an IRA, as well as setting aside some extra money for retirement and his kids' college using stocks, bonds, real estate, and mutual funds and allocation that would develop to meet his needs from a risk tolerance perspective. But unfortunately, instead of taking the advice from the professional financial advisor, he put all of it into that real estate venture, sight unseen, turned out to be swampland, and he lost a substantial portion of his investment. So again, all right, here's another one. I discovered the next Tesla or the next Apple or the next fill in the blank or the next whatever, right? The next hot stock. In 2011, this guy wanted to invest in it's called Fisker Automotive. It was an automaker that at the time was a competitor to Tesla. And the catch was that he didn't want to just invest a little money into the company. He wanted to put it all in. And they tried talking him out of it, telling him that was a good chance that they would lose everything, but he didn't want to hear it. So after spending an entire day doing research on the company, found the reports that said it spent close to $900,000 to produce a single car. That's great, which it sold to dealers for $70,000. And that finally got the investor to come to their senses. So it was a good thing because Fisker filed for bankruptcy a few years after that and has even been sued by Tesla for stealing their technology. Here's another one. So you need to know that I am very, very conservative. What do you think about Bitcoin? So I hope you guys had a little fun with that. There's a lot of stuff that we'll hear out there that is just dumb, and it comes from advisors. A lot of it, I think, in my opinion, comes from advisors. And once again, I think it's just they're using $100 words to validate their existence, really, I think is what it is, But what I said a little bit earlier about it, maybe it was just words made up in order to impress women at cocktail parties. I believe that is a lot of the reason that we have so many $100 words in this industry, or really any industry, because it makes us sound smart when we use words that nobody else can understand outside our industry. But hopefully what I have done a decent enough job of on this podcast is anytime that any of those words do come up, I explain what they mean. So hopefully you guys found a little bit of entertainment with that. And you can kind of start recognizing that when somebody says something, you're like, that wasn't actually a word, or they didn't really say anything at all right there. I feel like sometimes it's like some answers might even be like a politician's answer in some cases. Like, you said a lot of words, but I really don't think you answered the question. And now I forgot what the question was, so let's just move on. All right, so that's enough. Comments on whether or not I'm funny or not funny at all and should just stick with the financial stuff. You can email that to asknate@retirementrescueradio.com. But we'll continue bringing you guys content because we do want to empower you to live the retirement you deserve. Take care.